This is Matthew Cratter from Bitcoin University, and today I wanted to answer the question, will Bitcoin spot ETFs actually pump real Bitcoin? I've been seeing a lot of misconceptions in this area, so I wanted to make a video and clear all of them up in one video. The heart of this matter is in this comment from Bitcoin's Huge Bull Run 2024. Paradise 6606 says a spot Bitcoin ETF does not directly affect the price of Bitcoin. A spot Bitcoin ETF will likely attract significant investment inflows from mainstream investors who want exposure to Bitcoin's ETF/paper contracts within their brokerage accounts, but the money does not flow into Bitcoin. I've seen this comment in a lot of places, and I want to say on the record here, this is absolutely not true, and I want to explain how this works in this video. So an ETF, just to back up, is what's called an exchange-traded fund. You can trade it like a stock or invest in it like a stock in your brokerage account, but it gives you exposure to something else like a commodity or an index. For example, the SPY is a very well-known ETF, or the S&P 500 index. When you buy a share of any ETF in the US, the company that issued or sponsored that ETF is legally obligated to back that ETF with the underlying asset, which also means that the ETF can be exchanged by market makers and other institutional investors for the underlying asset. And this is very important, as we're going to see when it comes to arbitrage and keeping the price of the ETF in line with the underlying. So for example, when you buy the QQQs, you are buying an investment product, an ETF that is backed by actual shares of companies in the NASDAQ 100 index. Does the issuer of the ETF lie about these things? No, they do not. There's an army of regulators, accountants, lawyers, etc. who oversee these things, at least in the US. In the US, these investment products are transparent, highly regulated. Yes, regulators can be corrupt, they can be paid off, etc. But on these kinds of products, these very large products, there are many eyes on them. It's not like FTX with its offshore banks and its manipulated Excel spreadsheets. So we can be reasonably sure that all QQQ shares are backed by real stocks from the NASDAQ 100 index. And if they're not, and the QQQs begin to underperform the NASDAQ 100 before fees, people will just stop using the product. And so the sponsor, the issuer, Invesco, is financially incentivized to be honest here. Also, there's always this arbitrage across exchanges, across private trading desks, and between both the ETF and whatever the underlying asset is. So if the QQQs, for example, begin to trade above the value of the underlying basket of stocks, market makers can come in, they can go short the QQQs, they can then buy the underlying basket of stocks, little pieces of all 100 stocks, and then they can turn that basket of stocks into Invesco, to the ETF issuer, in exchange for QQQ shares, which they can then use to cover their QQQ short. So this is basically an arbitrage mechanism, a way of making very small percentage profits, but you do it with large amounts of capital. And this is one way that the QQQs stay in line with the underlying stocks. The actual mechanism is a little bit more complicated than I discussed here, but this is fundamentally how it works. So ETFs will always trade in line with the underlying assets due to these arbitrage profit opportunities. The reason GBTC could not trade in line with BTC is because it was a closed-end fund, essentially, and there was no way to really move between the two in arbitrage, and this is why GBTC began to trade at a very high premium to BTC and a very high discount following that during the bear market. So ETFs will always trade in line with the underlying assets due to arbitrage profit opportunities. If someone wants to buy a lot of QQQ shares, for example, and there are not enough in the world, market makers can make new QQQ shares for them by buying up shares of the underlying stocks, turning those shares into the issuer, and receiving fresh QQQ shares, which they can then sell on the open market. If you're finding this video helpful so far, I just ask you to hit that subscribe button. That would really help out the channel. So all these things we've been saying about the triple Qs are also true of BlackRock and the other spot Bitcoin ETFs. Every single share will be backed by real BTC that is being held at Coinbase custody or other highly regulated US-based custodians. The more demand for IBTC, which is what we believe the ticker will be for BlackRock spot Bitcoin ETF, the more demand for IBTC, the more real Bitcoin that market makers will need to buy to create new shares of IBTC. And whenever Bitcoin is bought, whenever BTC is bought on the open market and open exchanges like Coinbase and Swan and Kraken and Binance, etc. Whenever Bitcoin is bought on these exchanges, whenever it's bought on private trading desks or OTC desks, you may hear them called, or on P2P exchanges, it all affects the global price of Bitcoin. Because if Bitcoin is trading at a lower price somewhere, you could always buy it there and then sell it where it commands a higher price for a quick profit. You often hear people say, well, OTC, over-the-counter buying of Bitcoin, does not affect Bitcoin's price. This is absolutely not true. In many cases, these OTC desks, in addition to sourcing liquidity from other large sellers and buyers, will go into the market. Maybe they'll buy from Coinbase or Kraken or Gemini or something like this. And it's because of this arbitrage that all the prices stay roughly at the same price. And like the triple Qs, if IBTC, the BlackRock Bitcoin spot ETF, trades above or below the value of the BTC backing it, arbitrageurs, like we've been talking about, will step in and bring the two back into line. So if the BlackRock and other spot Bitcoin ETFs are as successful as I expect them to be, they will force market makers and other institutional participants to buy huge amounts of real BTC in order to back new shares of these ETFs. This buying is going to pump the price of Bitcoin into the hundreds of thousands, I believe, and beyond. I think it's a good thing to be suspicious. It's good to be cynical, like Bitcoiners always are. It's good to game out future attack vectors. It's true that there's been a huge unallocated gold market in London that's been used for years to suppress gold's price. This is not the GLD, this is not the ETF that's been suppressing the price, but these large unallocated, essentially bank IOUs in London. This has been used to suppress gold's price, but this is not where we are now with Bitcoin. America is in a state of decline, but it's not quite at the Banana Republic stage yet, and the US still has the deepest and most trustworthy capital markets in the world. They're not perfect, but they are still where global investors choose to store a lot of their savings. If you want transparency and private property guarantees, the US is still at the head of the pack, for example, far ahead of major markets like the EU and China. The Bitcoin spot ETFs in the US are going to start off as honest games. They're going to be fully backed by real BTC. They're going to be monitored by an army of regulators, accountants, lawyers. The game will stay honest until the US government gets truly desperate. Only then, and I think this is still a few years off, only then, when the government gets truly desperate, will it attempt to pull an Executive Order 6102, like FDR did with gold in the US, and confiscate the Bitcoin from Coinbase and other institutional custodians that are holding large amounts of it. Spot Bitcoin ETF custodians like Coinbase Custody, they're already honeypots, and they will eventually be captured, controlled, or drained by governments or other criminals. This is definitely coming at some point, but not in 2024. The first stage in these ETFs is going to be to give the greedy Wall Street pigs a few years to gorge themselves at the trough. That's where we are today. 2024 BlackRock is not trying to destroy Bitcoin. They're trying to get in on the action and make a ton of money from Bitcoin. And of course, they think in terms of fiat, but this is their privilege since they stand so close to the money printers. The US Bitcoin spot ETFs will start off fully compliant and fully backed by real BTC. I really believe this. And Wall Street is going to milk the Bitcoin cow for a few years before the real funny business starts. 2030 BlackRock and 2030 Coinbase might collude with the 2030 US federal government to confiscate Bitcoin, but that's not going to happen today. What a lot of people also don't seem to understand is that the effects from spot Bitcoin ETFs will help to outweigh any price suppression that we've been dealing with that has been possible using Bitcoin futures and Bitcoin ETFs backed by futures, because once the BlackRock spot Bitcoin ETF starts trading, it's going to be more difficult, not less difficult, to suppress the price of Bitcoin than it was before, because we're going to have this much larger institutional involvement in the spot market rather than the futures market. It's very easy to create Bitcoin, paper Bitcoin using futures, and if you do so, you're eventually going to get blown up, as I've spoken about in previous videos. But it's much more difficult to create paper Bitcoin using spot ETFs, and this is exactly why the SEC has been fighting against a Bitcoin spot ETF for so long, because its effect on the market is going to be very, very different, and it's going to make it much more difficult for bad actors to try to suppress the price of Bitcoin. So my conclusion, spot Bitcoin ETFs will start off as honest products. Nevertheless, if you can help it, don't buy a spot Bitcoin ETF. Don't buy the BlackRock one. Don't buy any of them. Buy or earn the real thing, real BTC. Hold it in cold storage yourself. That way you can both benefit from the price pump and also not get rugged eventually along with all the other Bitcoin ETF holders. But this is still just 2024. Welcome to the new year. Sit back, relax, and enjoy the giant price pump that is coming this year. And if you've been dollar cost averaging and hodling throughout the long dark bear market, you've earned the right to sit back and celebrate a little bit. Just don't do something stupid then, like quote unquote take profits and sell your Bitcoin to BlackRock, because that's where it's probably going to end up eventually if you sell it on an exchange. Bitcoin is the soundest money ever created, the hardest money ever created or discovered. Don't trade it for dirty fiat that can be printed and diluted on a whim by central bankers. If you enjoyed this video, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.